Welcome to the Fear and Greed Business News Afternoon Report for Thursday, the 28th of November, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the local share market hit yet another record today with healthcare stocks doing well. The S&P ASX 200 touched a new high of 8,466.7 points before closing up 0.5% to 8,444 points. CSL, Pro Medicus and ResMed all did well, so too the banks and the insurers. The underperformers included Wesfarmers, Telstra and Transurban, and some of the gold stocks. It really was a bit of a surprising day today. The lead-in from Wall Street overnight wasn't strong. Inflation data came out and it said that the US price rises was just a bit higher than expected for the second successive month. That pushed Wall Street lower, yet the ASX ended higher. Story number 2, the boss of Star Entertainment, Steve McCann, said the casino is experiencing negative monthly cash flows and has asked for patience to turn the business around. That's patience from both shareholders and lenders. The annual general meeting was held today, and certainly shareholders had to be patient because it went on for close to 3 hours. The general mood, not happy. The company announced today a pre-tax loss of $24 million for the first 4 months of this financial year. Mr. McCann said revenue had declined significantly and the cost of transformation and external advice had risen. He also said that the company is exploring asset sales. Now, Star is trying to raise $150 million in capital from external sources. If it can do that, it can access the second tranche of a $200 million loan. Star's been fined $15 million by the New South Wales Independent Casino Commission for multiple compliance breaches. It's awaiting an AUSTRAC fine for breaches of counter-terrorism and anti-money laundering laws. It needs to refinance $1.6 billion in debt for its Queen's Wharf precinct in Brisbane at the end of next year. So Mr. McCann's job is very, very busy. The company's share price finished down 6% today. It's about a third of its peak in late July. Story number 3, American real estate giant Proprium Capital Partners has bid $374 million to buy AVJennings. The price is nearly double AVJennings' trading price and its share price jumped nearly 90% today. Ever since COVID, and probably even before that, AVJennings has struggled. 20 years ago, its share price traded close to $20. Today, it's at 62 cents. The offer from Proprium is for 67 cents a share, and the difference between the offer and the current trading price suggests there's a few regulatory hurdles to still overcome. If successful, AVJennings will become part of Avid Property, which is owned by Proprium Capital. Proprium itself is a large private equity group. Avid focuses on the residential market in Australia. AVJennings has been building homes since 1932. Its majority shareholder nowadays is a Singaporean-based investor, Simon Cheong. Story number 4, the Australian Competition and Consumer Commission is taking online travel agency Webjet to court, alleging it advertised flights without compulsory charges and then requested additional payments after confirming bookings. The ACCC claims that is deceptive and misleading conduct. Over 5 years, Webjet has promoted airfares on its app, social media sites and websites that excluded compulsory fees ranging from $34.90 to $54.90. At least that's what the ACCC is claiming. Chair Gina Koskadleep said in a statement that the lowest price must be a true minimum price, not a price subject to further fees and charges. Today, Webjet said it had fully cooperated with the ACCC before the legal action and proactively undertaken a number of steps to further improve its disclosure of pricing and fees. And story number 5, Fisher & Paykel, the New Zealand-based ASX-listed respiratory care company, posted slightly disappointing results for the half year to the end of September, sending its share price lower. New Zealand's biggest company has a dominant position in the ventilators and generators market among hospitals. As patients' numbers increase to pre-pandemic levels, earnings have risen, but not by as much as investors had hoped. Net profit was up 43% for the 6 months. Revenue was up 18%. Chief Executive Lewis Graydon said new products and changes in clinical practices were driving demand for its humidification products used in respiratory and surgical care. That's it for the afternoon report for Thursday, the 28th of November, 2024. Michael Thompson and I will be back tomorrow morning with the Friday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.